Good morning and welcome back to Almus Market Mornings, your daily dose of global financial updates. The developing theme remains a bout of dollar strength with major pairs like Euro and GBP trading below the key technical levels. Whether this is just a retracement or a larger theme developing is something JK will be able to answer. But interestingly, in commodities, we are seeing oil coming down significantly. Morning, JK, retracement in dollar and fall in oil prices. Keen to hear your thoughts.
Hey, good morning. I think the global picture of growth is really darkening. That's the increasing signs that we are getting. Yesterday, we had the Chinese trade data, which showed a big fall in the exports. And interestingly, their exports to US, who is their main partner, has fallen substantially. Then we had the German industrial production that also fell quite a bit, and there was no improvement at all that we have seen. On a month-on-month, it was down 1.4%. From 0.1% in August, and this number was pertaining to September. And on a year-on-year, it is dropped to 3.7%. Now it's 7% below the pre-pandemic level. That speaks of how the German economy is performing. And coupled with it, the Chinese trade data and the previous week's week data from US, all of this has given a backdrop to the growth, which is not so great, and also that actually led to the oil price falling, continuing to fall. And of course, the situation in the Middle East also not really so worrisome right now, although no real solution has been found and the attacks are continuing. But as per expert opinions, I think in due course, this is going to kind of find some solution, or at least a temporary stoppage. That is what is. So all this not only led to the oil price falling, but also led to the treasuries once again falling, and the bull spread actually steepening. That's what we are seen yesterday. Yields fell across the tenor once again. Mainly the 10-year and the 30-year, that fell by 8 to 9 basis points. We had, of course, the Australian Central Bank, who stood apart from others, hiking rate by 0.25%, responding to the recent rise in inflation. But his comments were quite dovish. I think he's actually indicating that there will be probably no further rate hike, and that falls in line with most of the major central banks. So all of this together, we had a fall in the the yields also continuing with its trend. Of course, the bond experts are looking at 4.50 holding for 10-year and 4.70 holding for 30-year, as US supplies of fresh paper will be ongoing. And also we have the Powell speech tomorrow, which he might use for cautioning the market against assuming too much on the rates, because they still don't have the inflation at their target, well above the target right now. So it may be used by Powell as an opportunity to caution. And in fact, Fed members who spoke yesterday were also quite mixed in their views. For example, Mr. Goolsbee said, as long as while we are making a progress, the argument shifts from how high should the rate go to how long should the rate be kept high, while Kashkari, the other member, who said that economic resilience despite rate hikes is a good news, but we haven't completely solved the inflation problem and we have more work to do. So these were somewhat trying to mellow the fall in the yields. And stocks, of course, had another positive day, but not as much as the previous days, just on the positive side, because Nasdaq was gaining due to the fall in yields, and this continues a strong run that the markets have been seeing. And gold also hit a 2-week low as the safe haven rally triggered by Mideast tensions ebbed, and oil was at 2.5 months low. So the commodity space was somewhat subdued. On the currencies, the core reason behind the currency moves, that is the rally in the dollar that we have seen from July, has somewhat reversed, because it was the widening differential between US and other countries that was keeping the dollar well bid, and that has actually reversed in the last 1 week. Starting with the Treasury, announcing a lower borrowing for the longer tenor, and then the host of data from US on the employment side, and as well as the ISM services side, bringing down the yields by 0.5% almost. And then the dollar rally has been stopped on its tracks, and we have seen good, rally in the euro, GBP, etc. Of course, yen stands out without moving much. So that, of course, yesterday we did see a retracement after the eurozone data coming bit weak. Apart from the industrial production, we also had the construction PMI in the eurozone dropping, and so overall activity in euro is definitely dropping. But interesting point to note is that whenever we have a weak data from eurozone, we do see a reaction in the Europe, and that mostly is temporary. And once the market discounts those numbers, again, euro tends to rise. And this is actually an indicative of the underlying trend of dollar being weak, or rather, I would say more of diversification from the dollar, that which sometime back even Yellen had hinted that the holding of dollar reserves by the central banks can come down in the coming months, although the dollar status as a reserve currency will be maintained. This is something that we should recall, and this is the main reason why the dollar underlying trend remains weak. On Japan, of course, BOJ keeps talking about yen being too weak, but we have really not seen a very big action from them on that front. And even on the policy front, they keep on pushing the decision forward. And that really is the reason behind the yen being steady above 150 once again. And just to give you a perspective, Japan holds the largest amount of global financial assets at 3.3 trillion. And any change in their policy or a sharp move in the yen is going to upset the whole global markets. And that is why they're really taking a very cautious step as far as their policy change or even on intervention is concerned. So that's about the currencies. Yes, I think Chinese yuan, we have to mention that already we have seen a drop of near 1% from the recent peak in the Chinese yuan. That's led to Asian currencies strengthening as well. So some relief again there. Now that relief is still not felt in the INR, because INR yesterday once again was at 3 paisa range between 25 and 28, and that is seen as not changed. But I think after having seen about a 3.5% down move in the dollar index since early October, and then even the EM currency pack, EM currency index having risen by 2.5% against the dollar, I think the INR's overvaluation in RER terms, which we have been mentioning about at 5%, is definitely has corrected now. And I think if we do see flow, I cannot rule out, because we are hearing some fundraising plans for some corporates, and these can actually lead to some modest strength in the INR. Of course, depends on whether these flows are absorbed by the RBI. But right now, I think some bias towards strength in the INR is developing. Even with the oil now coming at below 82, the Brent oil, and a big drop that we have seen also should be helping the INR. So we really look at the flows in the RBI, continue to look at the flows in the RBI, and my bias slightly towards the strength in INR, because we have been talking about a lot of factors which should have weakened INR, but that has not happened thanks to RBI actions. And now those factors have reversed: the DXY strength, the Chinese yuan weakness, and the oil. So cases can be made for INR to retrace a bit to the downside. Let's wait and see.
Thank you, JK. And global growth picture, as you mentioned, remains dull. Chinese trade data showed decline in exports, while German industrial production fell month on month, down 1.4%. But if we compare it to the pre-pandemic levels, they're down 7%. The key event to look out for would be Powell's speech, which might provide further guidance. Things to look out for would be comments that prop up the yields, because that provides a natural tightness in the financial condition. Chinese yuan is seeing some strength, leading to strength in other Asians, but as of now, rupee has remained immune. But as JK mentioned, increasingly the bias is shifting towards a stronger rupee, as factors that are negative to rupee are slowly subsiding. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.